Well, the EdenTree European Fund not only follows a value-orientated approach to investment, but it combines that with a robust sustainability screening as well. We feel that adds value to the overall strategy, that it has aligned the fund historically in terms of growing structural trends within the economy. It's helped us to avoid value traps. And combines very well with that value-based approach. The approach is to maintain, good diversification over the strategy, to look for opportunities in companies which are, trading at low valuations, are probably out of favour with the wider market, where the wider market hasn't recognised that these are very strong income opportunities where we can see not only high dividend yields, but they're likely to grow over into the future. That we can find very contrarian areas of the market which for one reason or another have very much fallen out of favour or have temporary very difficult operating conditions, which gives a good opportunity to buy stocks at cheap valuations but with strong recovery potential. And I think thirdly, look for companies trading down on low valuations where people haven't recognise that they are exposed to strong structural growth trends, that the business is transforming itself, and that transformation will lead it to be both more profitable and to grow faster over the long term. Personally, I think experience is sort of not quite everything, but an awful lot when it comes to investment. I've been working as an investment analyst on this fund since 1999. I was made lead manager on the fund in 2007, and I think that does create a very deep knowledge of the economy, of the opportunities within Europe. And whilst we are always looking for new opportunities, new companies that are coming along that fit our investment requirements, actually having that strong background knowledge does allow you to find opportunities, to realise that companies are having a difficult time, but that's not likely to last forever, and really does add to the overall investment process. And I think it's also combining the ideas that are coming up elsewhere in the organisation as well. I still think European value looks very attractive compared to other areas of the market. Europe is trading on a big discount to the US, which after all is 70% of the global market, or even more today. And it gives you an opportunity to get into cheaper companies there. I think it's probably at a better stage of the economic cycle as well. It's not as overextended as the US economy is in many places. But it's also that big differential in valuation between growth and value within the European market as well. Means that I'm finding very compelling opportunities really right across the equity market.
Well, on that, where are you seeing interesting opportunities in the market looking forward?
Well, having previously had some quite concentrated positions in certain areas like banks and like general insurance, but now taking profits. I think where we have reinvested, it's really across a broad range of different companies. Maybe I could pull out a few in particular. One would be maybe food ingredients, where actually that industry has had some setbacks. We have RFK Jr. as not only in charge of healthcare in the US, but also in charge of the relabelling of foods. That's been delayed. It means some of the big branded companies in the US have delayed decision making in that area until the regulations come in. Once that happens, they should want to increase spend in terms of food reformulation, and companies like Kerry, which we added to the portfolio recently, should do very well. We believe there are opportunities in sort of anti-AI stocks where, because people are so looking into the future and saying AI is going to transform everything, they maybe are missing out on the strengths of some existing players within those sorts of industries. So Publicis as an advertising agency we feel could do very well. And actually, in terms of AI itself, there are opportunities to buy companies which will benefit from AI but aren't trading on premium valuations. So a lot of the big names we would avoid, but we feel that in some of the sort of more medium-sized, even smaller-sized companies, there are good opportunities. And one of those would be Technotrans, where it's got exposure through its cooling technology to a lot of growing markets, whether it be AI data centers, whether it be larger electric vehicles, and even satellite antennae, which also heat up a lot, and they've just won new business in that area. So seeing a lot of growth opportunities from being perhaps the leading specialist in that area.